This is my time. I'm on the rise. Can't hold me down. I'm too fly. This is my
Welcome
time.
to episode 12 of the Physician Wealth Framework series, the family office mindset for doctors. Let's imagine this. You're earning $600,000 a year. You've got $2.5 million in net worth. You've done 2 or 3 deals, but you feel stuck. You're busy, you're smart, you're earning money, but you don't have a system. You don't have clarity on what to say no to, how to deploy capital intentionally, or how to protect what you've built. Meanwhile, the $100 million plus families have solved this. They operate like capital allocation machines, not just investors. They build family offices. And in this episode, we will decode exactly what that means and how you can think like a family office, even as a physician. A family office is not just a rich person's accountant. At its core, a family office is a system that helps you protect, grow, and intentionally deploy your capital over time. There are 2 types. Number 1, a single family office. One ultra wealthy family, full-time staff, over $100 million minimum, often $500 million plus. And number 2, the virtual or hybrid family office. No employees, leverage trusted advisors, curated deal platforms, co-investor circles. This is usually of families or individuals of $1 million net worth to $25 million in net worth, using family office principles without the overhead. Personally, I work with a local group who's basically a hybrid family office or fractional family office. They operate like a hybrid family office for physicians and business owners. They've helped me coordinate across my CPA, banking relationships, estate attorney, and my investment strategy, all under one roof. It's allowed me to centralize my stock portfolio, access liquidity through a securities-backed line of credit, integrate cash value whole life insurance, and invest in real estate with clarity. It's not about having a full-time staff necessarily. It's about having a team that helps you act like a capital allocator, not just an income earner. If you're curious how I structured my setup or want to see how a physician-friendly hybrid model works, just DM me or reach out to me. So how do family offices think differently? Here are 7 mindset shifts every physician should borrow from family offices. Number 1, they use an investment policy statement, or IPS. Not a napkin plan, a written document. It outlines your cash flow targets, liquidity preferences, risk tolerance, target asset allocation, and deal filters. If it's not in the IPS, we don't chase it. Number 2, they think in decades, not quarters. They ask, how will this perform over 7 to 10 years? Will this produce legacy, not just return? Number 3, they diversify by structure, not just asset class. They might hold real estate equity, real estate debt, operating company equity, preferred equity, private credit. Why? To balance risk, timing, taxation, and control. Number 4, they manage cash flow like oxygen. They don't just optimize for IRR. They optimize for predictability and timing of returns. Quarterly distributions is more important than theoretical 5-year exits. Number 5, they say no 90% of the time. They have filters. They only invest in what fits their strategy. No FOMO, no distractions. I know for me personally, I get major FOMO. So I've had to embrace JOMO, which is the joy of missing out, so I can stick with my investor DNA. No is the most powerful wealth strategy. Number 6, they build investment committees. They don't invest solo. They call experts, peers, or formal advisors to evaluate. You can do this too with just 2 to 3 aligned physicians or capital-minded advisors. Number 7, they protect what they've built. Family offices prioritize asset protection, estate planning, entity structuring, tax mitigation. Wealthy doctors often focus on growth. Family offices obsess over durability. Now, you can build a virtual family office right now. Here's the simplified framework we help physicians use. Define your operating system, your IPS, your cash flow targets, your deal criteria. Number 2, build your capital team, your tax strategist, your estate planner, deal filter or co-investment group, and your bookkeeper and fractional CFO. Number 3, create a quarterly capital review. Once per quarter, sit down and ask, what did we earn? What did we keep and what did we deploy? What do we need to rebalance or reallocate? This gives you clarity and removes the fog of, I think I'm doing okay. Number 4, centralize your dashboard. Use a tool or spreadsheet to see liquidity, cash flow by source, active versus passive exposure, tax shielded versus taxable. This turns a scattered portfolio into an intentional system. Here's the shift. You are not just a physician. You are a capital allocator. You don't need $100 million to operate like a family office. You need a framework. Your challenge this week, write your IPS or investment policy statement. Just one page and include return targets, risk boundaries, asset classes of interest, time horizon, deal filters. Number 2, start your capital team. Who is your tax strategist? Not just an accountant who does your taxes at the end of every year. You need to prepare the year before and strategize for the following year. Do you have a deal filtering partner or peer group? Who do you text when a deal comes in? And number 3, schedule your first quarterly capital review. Start the habit now, even if your system is simple. Next time, in episode 13, we're going to talk about something that most physicians never consider, the hidden cost of playing defense. Because staying safe might be the riskiest thing you're doing right now, especially when inflation, taxes, and opportunity costs are compounding quietly against you. This is the Physician Wealth Framework series brought to you by the Doctors Investor Club. Let's start operating like a family office, even if it's just you and the spreadsheet for now. See you in the next episode.
This is my time. I'm on the rise.